Welcome to the podcast, Ethan. It's great to have you on. Do you mind giving us a little bit more information about yourself and what you guys do at Latchel?
Yeah, thanks for having me on, Alex. I'm Ethan. I'm the CEO, co-founder of Latchel. Started the company about 7 years ago, and we started the company because my co-founder had taken over a property management firm in Los Angeles, California, and maintenance was a nightmare. It's a logistical nightmare. Managing all the moving parts is really challenging, and we went out looking for solutions to help streamline that problem. And 6, 7 years ago, you didn't have all the generative AI, you didn't have LLMs, but we knew we could leverage workflow automation to improve that process. When we didn't find any software solutions out there, we said, hey, let's solve this problem. And that's how Latchel was born. We wanted to make it a lot easier to manage the coordination and logistics of maintenance in a rental property, with the main focus being, how do we deliver something that drives up the renter experience and makes it easy and beautiful for the renter living in the property?
That makes sense. So, in a real simple sense, what does Latchel do for the property managers? In a simple sense.
Yeah, let's start at the beginning of a maintenance problem. Renter tries to flush their toilet and it doesn't flush. And so the renter says, all right, I got to call my property manager. Now, they might call, they might use our portal, they might text. When the resident reports that clogged toilet, it's actually flowing through Latchel's platform, where we do a bunch of troubleshooting on the fly to fix it. Because if we can fix the thing, we never even have to create a maintenance request. We don't have to dispatch anyone. We solve it for the renter right away. It's taken care of for the property manager. So we do that first, and we do that within 15 seconds of the renter reporting the issue. So this is super fast paced because we want to keep that renter experience at a peak level. So we'll do that. Let's say we can't get the issue fixed with the renter. So we'll use video, we'll text with them, we'll send them instructions, but let's say we can't get the thing fixed and we determine, okay, there's probably a mainline clog. We're not going to be able to use a plunger. We got to get a plumber out. At that point, if that's defined as an emergency issue by the property manager, our team's immediately on the phone dispatching service providers, plumbers, to go out and get that issue fixed within usually 2 hours if it's an emergency. Sometimes it might be, 12 hours, depending on the type of issue. We then track that plumber gets to the job site, completes the work. We check in with both the renter and that service provider that work got done. And at this point, there's a really cool experience where the renter gets to tell us about their experience and leave a rating. If you've ever looked up a property management company on Google or Yelp, you're usually not seeing 4 or 5-star reviews. You're usually seeing 1 or 2-star reviews. So Latchel actually operates as a review engine too, where as soon as that renter leaves, 4 or 5 stars, we actually forward that over to the online profiles and help our customers boost their online reputation, which is good because it helps them find new renters when they lease up. It's good when they're going for finding new clients. Clients look them up, see 5 stars on Google. They say, wow, everyone else in that neighborhood has 1 or 2 stars. I'm going to work with that guy.
Makes sense. That's a pretty good value proposition. I like that. Now, how did you actually come up with the idea, but how did you actually start the company and develop the product and also get your first customers on board?
Yeah, we approached it kind of scrappy. So the first thing, we didn't go wireframe up a software, start coding an initial prototype. The first thing we did was we actually started talking with property managers and talking about the types of solutions that they'd want to see. It's very much more like a consulting type process with them versus hey, let's build it and see if they want it. So we started consulting with customers, and the intent wasn't, we weren't charging, we weren't making money doing this consulting. The intention was let's figure out what property managers really need. Part of it was we just couldn't believe there wasn't a good software that handled it already. And so we're we got to really, this has to exist. Let's go talk to a bunch of people, see what they're doing. We do the consulting, find out this is a big problem. There weren't any platforms that did this yet. And the first thing we did is we said, let's package a product. But really all the product was me and my co-founder taking phone calls. And it was like, we're going to package something that looks like software, but it's not going to be software. We'll first see if people will buy this thing that we're going to lose money on. Like, there's no way it's going to be profitable. It's going to be me, my co-founder, a couple other people making calls back and forth between renters and service providers, doing the best we can. And when we saw that work and we saw that product growing, it was validation for us to go build an entire end-to-end software platform around this problem. And so that's when we started doing the actual building of it. And, things started taking off. I'd say it was probably like a year, maybe year and a half into it. We really started getting some scale. And that's kind of when the journey started. We ended up going into a Y Combinator, which is a startup accelerator here in California. And that was sort of the impetus for us then going out and raising traditional, venture money and building a company that way.
Nice. What was your experience like in Y Combinator?
It was one of the best experiences of my life. Whenever I talk to people that haven't gone through Y Combinator, they kind of get worried about how much equity they're giving up. That might not be as much of a worry now because Y Combinator has since they give a lot more cash to companies that go through the program. When we were going through the program, I think it was like $100K, something around $100K. The people before us got nothing. So, Y Combinator would take equity. You wouldn't get cash. But the crazy thing is, even having a $100K investment from them, that $100K is almost like meaningless at this point because the value was in the teaching they provide on how to rapidly build a company, how to know if you're on course for finding product market fit. And then the next piece they really do a great job teaching founders is how to manage fundraising. Like, there's a whole skill to raising money for a seed round, raising money for a, Series A. And if you're a first-time founder, you will not do it right unless you have help. And the great thing about YC is they help you. And help isn't even a strong enough word. It's not like they're doing it for you, but they transform who you are as a founder. They turn you into a founder that's capable of doing things that otherwise you would not be capable of because you just don't know the right questions to ask. You don't know even the right way to look at VC and company building. If that's the path you want to take as a founder, my first thing I'll tell people is go apply to YC. And if they say no, apply again. And if they say no, apply one more time. And then you can go somewhere else if that's still not the right path for you.
Gotcha. Yeah, it sounds like a pretty good experience, and there's been a lot of big companies that have come out of YC. And in terms of like your journey as a founder, I guess what have been some of the struggles that you've had to overcome along the journey? There's a lot of like personal hurdles that you have to overcome in terms of your own mindset, limiting beliefs, and getting yourself to actually do the most important work, and then also delegate to the team. What have been some of the challenges that you've overcome?
Yeah, I mean, after 6 years, it's a lot. So it's hard to just pick like a couple, but if I'm going to go in stages, I'd say I think the first thing that Y Combinator helped with was unlocking a different way of thinking about business building. I had built a company previously that was bootstrapped, more like lifestyle business. And, there's a way to think about building a company that's very much grounded in your P&L. It's like, how much money am I bringing in? How much am I going to spend? And you have to think a little bit differently when you're trying to build a company that's going to be a unicorn, especially if you're raising money too, because it's like you shouldn't be thinking in terms of, oh, we made this much, so I can spend this much. You have to think completely differently about the business building. You actually have to think a lot about your TAM and strategically how to unlock that total addressable market. Whereas in the prior business I was selling e-commerce products, through FBA. I'm like, I don't have to think about TAM. I just like build a decent business that makes more money than I spend. And cool. Now we've got profit. So that was like the first thing that really had to change my thinking around, and YC helped with that. We then did our Series A during 2021, which in some ways was the best time to be raising money, and in other ways was the worst time to be raising money. Because if you didn't continue that rocket ship trajectory, well, when you look back, all those companies that raised at that time had premiums on their valuations. And so if you didn't continue that rocket ship growth or even like accelerate the growth beyond what you thought you'd have to, well, it's hard to like keep that progress going. And so I think the challenge at that time was figuring out how do you actually realign a company, based on a changing world, changing valuation economics, changing market dynamics. It's almost like for Latchel, it felt like our company was transported into another dimension in the span of just like a couple months where the world just looked different. We have to adapt as a company. And I think figuring out how to adapt when like kind of the rug, not that the rug was pulled out from under us per se, but when you're suddenly in a completely different market dynamic that you've never been in, adapting to that is challenging. It takes a lot of work, takes a lot of thought, takes a lot of time, and you have to be willing to let go of what you were doing before to make it work.
Yeah, for sure. In terms of growing the business, what were some of the key marketing and sales strategies that allowed you to get to your first 7 figures in annual revenue and also beyond that?
Yeah, it's kind of interesting. Like our main strategy in building the business is probably not too dissimilar from what your core focus is. And I think it was at the time, like this was 5-6 years ago, it was unconventional to use cold outbound email marketing as a primary lever for growth. But that was what we used. And it crushed it. It is still our biggest channel is outbound email marketing, and a fraction of our list is warm. Most of it is still cold outbound email marketing. Now, like some of this might be a virtue of like the industry we're in and the way we're able to procure lead data. There's some interesting things we can do with finding property management companies and reaching out to them. But in the last 5 years, what's also happened is email service providers have really clamped down, making it a lot harder for email to work. So I think actually if we were just starting the company now, it'd be a lot harder for us to figure out how to make that strategy work. Because we had already built an engine, I think we have a little bit of an edge today, but we are finding that that channel has degraded to some degree, and figuring out how to repair that degradation is a challenge. And so, the future of our growth is actually diversifying and finding other distribution pathways, not just outbound email, which is sort of about the core driver. I mean, we do other things too. We have some cold calls, we do some content marketing and things like that. But all this stuff just pales in comparison to the outbound email work we're doing. And so now it's like, all right, well, can we build another mechanism somewhere? That's sort of a future. The future of Latchel will be more diversified.
Totally. Yeah, you definitely caught the wave before it even began. 6 years ago, doing cold outbound email it's a totally different game to what it is now. And even over the last 2 years in particular, I was seeing like a huge change in standing out in the market. And performing well has gotten even more difficult. 6 years ago, you could put a simple email together, didn't have to have great copy, didn't even really have to have a great offer, and you'd still get a 10% response rate. It was crazy. Whereas now, even with all the good things in place, a lot of companies do struggle to get, even above a 1% positive reply rate. So
I'm telling you, you would totally lose it if you saw some of our campaigns from like 6 years ago. It's like they weren't great. I'll start there. The campaigns weren't great. Like the copy wasn't great. The way we personalized wasn't great. But we'd have 50% open rates and like 20 to 25% reply rates on these. Like, we're not getting that today.
Yeah.
Like, good luck getting something like that today. But
yeah, Yeah.
it's still a crazy powerful mechanism.
It is. It is. Yeah. Super crazy. And such like Facebook ads and that sort of thing, like back in 2010, it was like the easiest thing in the world. Put a little bit of money in the ads and all of a sudden you're making money. But now it's gotten a lot more sophisticated, a lot more difficult to get a positive return on investment. Same thing with cold outreach. Guys have become a lot more sophisticated and a lot more skeptical. So it's like, yeah, well, just using and relying on cold email as the only channel isn't as effective now. It's obviously using that in combination with other channels, obviously using cold email as a traffic source, but you've got to use other things and really narrow down and hammer down on your social proof and offer what are you actually solving for your end customer.
Yeah, social proof is definitely an area where we can improve. In terms of like omni-channel approach, we do some interesting stuff with AI now, which we had never done before, with like voicemail drops. And this is great for making like our SDR outreach more effective. And this all happens in combination with the email cadences. So you can like send a couple emails. Oh, I also left you a voicemail. Well, it's not like I actually called and left a voicemail. We use this voicemail drop tool that replicates my voice because AI is super creepy and can do that. So there's like interesting things like that, but you do have to really do so many rounds of iteration on the offer and the copy and how you approach it. Otherwise, you just don't get the results.
Yeah, exactly. In terms of, I guess, the company as a whole, what are your future plans for, say, the next year or 2 years? Do you have any big plans on the horizon or?
Yeah, well, we just got to cash flow positive as a startup. That's a huge milestone. Destiny is in our hands. Like, no pressure to have to go raise to keep the company alive. We get to just keep growing and
Amazing.
Be a little more like creative in that growth, less rushed per se. Can be a little more intentional that way. And so a lot of the plans for this year are around continuing the development of like our core distribution engine. We've talked a lot about like the successes we've had in that distribution engine, and there have been a ton, but there's also like risks to it. And the big strategy for us now is go omni-channel, find more distribution pathways, hedge against that risk by diversifying. To your point, there's probably a whole bunch of like content work we need to do, and like how do we provide more social validation and more social proof to make the offer more powerful. So a lot of this year is about empowering that engine, creating more predictability in that engine. Actually, as we're talking, I have this, I don't know if you've ever read this book, Predictable Prospecting.
I haven't.
Okay, you should check it out. It's there's this book called Predictable Revenue, written by, this is basically the follow-up to that book. It's the same folks, come from Salesforce. When you read this, it's like none of this is revolutionary either. It's like everyone's going to read it and be like, oh yeah, totally, makes sense. But it's just like, sometimes you just need that like kick in the butt to go rebuild some of your engine. So that's probably like the first half of the year. The second half of the year for us is once we've built this predictable top of funnel and we've got that engine producing more consistently. The second half of the year is about opening up new customer types is probably the best way for me to say it. So we know what our ideal customer profile is today, and we're securing that distribution engine for that type. There are other customer profiles though that today we're ignoring, and we ignore them for many reasons, but ultimately it comes down to these customer types either don't quite fit our product, or we haven't built mechanisms to create the right lifetime value out of certain types of customer profiles. And so the second half of the year is actually developing new customer profiles to be an ideal fit for Latchel. Some of that's going to require product development. Some of it's going to require less product development and more distribution innovation.
Interesting. So right now, who is your ideal target customer?
Yeah, this would be a third-party property manager in the US. You're managing somewhere around like 200, 2,000 properties. And these are going to be a lot of single family properties and then smaller multifamily buildings. So think like buildings up to like 30, 40 units. Most importantly, it's like buildings where you don't necessarily have a bunch of on-site technicians supporting the building. So you've got this very distributed portfolio. Managing the dispatching of a lot of third-party vendors, that's very complex. It's very time intensive. Because you're scattered everywhere, it's very hard to create consistent resident experience, right? Like if I'm in a big building, I can just walk down to the lobby and say, hey, there's something wrong with my unit. When you're managing 500 single family homes, creating a consistent experience for those residents is challenging. And that makes growing the business hard.
Totally. Makes sense. And in terms of, advice for your younger self in the early days of starting Latchel, what if there was one piece of advice you could give to your younger self, what would it be?
Geez, there's probably a list of 100 things I'd want to tell my younger self. I think if there's one thing that I undervalued when I started the business that I'd want to be hyper focused on, if I could redo day one, it would be that in building the product, I was default thinking about the distribution mechanism. The way we built Latchel was we saw a problem. Lots of people had that problem. We said, let's build a product that solves that problem. And that was how we approached it. We never said, we need to build a product that solves that problem. And however we solve that problem has to somehow create more customer opportunities. We didn't think about it that way. And so when you think of product-led growth, there was very little opportunity for us to generate product-led growth because we weren't even thinking about that in developing the product. But really, there was a customer problem and there was a distribution problem. And when we built the product, we should have been thinking about both simultaneously in building that product. We're only thinking about how do we solve that customer problem? And it was great for solving that customer problem. But then, eventually you say, okay, well, how are we going to distribute this now? You're like, all right, back to square one. Let's scratch our heads and, figure something out.
Totally. Makes sense. And in terms of the future, I know with software and SaaS companies, but also with AI coming into play, where do you see AI coming into play with, even your company Latchel, but also competitors in the market? How do you see AI changing or affecting the space?
Love this question. It's probably what our product team this quarter and last quarter has been most focused on, particularly because we're the type of company that interfaces directly with hundreds of thousands of residents. We interface with hundreds of, maybe thousands, tens of thousands of service providers, like plumbers, contractors. And then we have, hundreds of property management platforms on our service. And all these people need things. And the traditional model was, all right, we've got a 100-person call center to take in resident work orders, where the resident has to self-serve in a cumbersome, click tree kind of way. Generative AI has unlocked so much improvement in how we ingest maintenance problems and funnel information to the right people. And then it enables a responsiveness to them that you don't otherwise have. So we've done, and it kind of naturally makes sense, a ton of building of conversational AI to enable faster response rates and faster data sharing with all the folks that use Latchel, like the residents, like the service providers, like the property managers. And we have still so far to go to continue developing that. And what I love about the fact that we're 7 years old, is we've got all this data piled up over 6-7 years that we can freely be plugging in now to these generative AI models to do more effective troubleshooting, more effective dispatching, more effective analysis of invoices to know that the price you're getting for a certain type of repair is actually a good price. You've never had that type of data before until now. So AI has been huge. It's going to continue growing in this space. I mean, I think generally the way I think about startups building tooling with AI is that you need to have data that's very pointed to the specific problems you're solving. And so I think so long as you have some insight, innovation, some unique data set that you can bake into like a conversational AI or generative AI model, you've got something really interesting and powerful to deliver. For us, it's all going to be around like maintenance as like a rental management solution. But I think it doesn't really matter what you're building or who you want to serve. If you have some like unique data that you can plug into like a generative AI model, it's going to work. It's going to be great.
Yeah, totally. And then in terms of, growing to the next level, what do you think would be holding you guys back from, 2 or 3xing your revenue?
I think there's a lot. I think it's easiest to break it down by where we're going to be seeking to increase like our distribution. There's like that core ICP, ideal customer profile, that I talked about earlier. I think there's a couple things we could do there. I don't think we have the best product marketing. And so product marketing is a place where I'd like to put more focus as a company on. And here I'm talking about sharing new features in a way that gets more reach, even to existing customers. And then presenting maintenance is such an expansive problem. You have to do a lot of building in different areas to solve for maintenance. And our product marketing effort hasn't done the best job possible of bringing all these feature sets together into a like cohesive, in a cohesive way, where you can go look at Latchel and be like, I get it. I get every part of this. I know how much it's going to solve for me. Let's go do a demo. So I think the product marketing is a big one. I think we talked about it earlier. Diversifying the omni-channel approach is, I think, critical. So I would say those things.
Cool. Ethan, it's been great to have you on, and super interesting conversation and what you guys are doing at Latchel. Where can people find you if they want to get in touch?
Yeah, you can find me on LinkedIn. And if you're a property manager, or if you know a property manager, check out Latchel.com. You can go tell me what I'm doing wrong with our product marketing after you check Latchel.com.
Thanks for your time, Ethan. Appreciate it.
Thanks.